Just got off the conference call of Microsoft where they talked about the Q1 results, which came out after the bell. And maybe more importantly, about 30 minutes into the conference call, they give Q2 guidance, which after reporting guidance for Microsoft in the upcoming quarter, shares did a U-turn, fell over 4% in the after hours. We'll see if that holds up during the course of the video. And moving into tomorrow, we'll talk about some of the reasons why Microsoft is giving relatively light guidance. We'll talk about that. We'll go through the Q1. We'll take a look at the different business units. They talked about AI extensively on the conference call. We'll come on over here, look at the financials, and we obviously will look at this technically as well. What is going on, investors? Hopefully you guys are doing well out there. Got a big one today. We got Microsoft. Over the past year, shares of Microsoft over 28% year to date. Not maybe the breakneck pace that some of these other stocks that we're looking at, up about 15% year to date. We've got a stretched valuation on this one. I tell you what, we did a video on Google yesterday where they're trading kind of low 20s, maybe to the upside, high teens price to earnings multiple going forward. Microsoft is not there. They're trading up over 30 times forward. That's a rich valuation for a company like this. Now, they came out with the Q1 results after the bell, 16% growth year over year, beat expectations by about $1 billion. Revenue came in right about $65.6 billion. More importantly than that, they gave us Q2 guidance on the conference call. All said and done, the company is guiding between $68.1 billion up to $69.1 billion. And folks, that actually comes up short of Wall Street expectations. In fact, Wall Street was expecting a number close to 69.85. Now, keep in mind, the company just beat expectations by about $1 billion. Microsoft is known when they give this guidance on the conference call, it's a little sandbaggy. It's probably $1 billion, maybe $2 billion lighter than where the company is going to come in. But the high-end estimate over at Wall Street for the next quarter was for $71.2 billion. Also, it brings into question, if AI is so red hot, why isn't Microsoft cashing in to a bigger degree? We're growing 12%, 13% over the next several quarters over this company. Why aren't we seeing an acceleration there? We'll talk about that a little bit. So they talked about Azure, which obviously kind of lumps in some of their server and their cloud services, many of that being used for AI. They noted that of this 33% growth rate, 12% was related to AI, basically open AI, meaning, and this is bullish certainly for Amazon, which I do believe reports tomorrow, means their core kind of traditional cloud business is still growing at like 21%. So the traditional cloud business is still expanding even after kind of the 10-year expansion that we've really seen, particularly from Microsoft, obviously with Amazon as well. Its other business lines continue to grow nicely over at Microsoft within expectations. Search and news growing 18%. LinkedIn. I mean, who's on LinkedIn these days? You can find the link down in the description below if you want to connect with me over there. Up 10% year over year. Microsoft Cloud 22%. But the company rolled out Copilot, I believe it was this time last year. It was a $30 additional charge per seat for corporations. We're just not really seeing that growth from an exponential standpoint. For Microsoft, it's more incremental and it's more steady. I don't think there's anything wrong with that, but you just have to understand, if you're a Microsoft investor, if you want to get into this stock, a lot of that growth, a lot of that is already priced in. When you've got a forward price to multiple on this one at 32 times, and other companies like Google, which actually have a higher revenue run rate or almost equal to Google going forward, well, they're trading at a far less valuation. Now, that was the segment results. When we come over here and look at the financials, it doesn't get much better than this. We had that $65.6 billion worth of revenue. We talked about how that was about 16% growth year over year. It beat expectations also. One of the reasons why Microsoft gets the big valuation is they got these big gross margin. Off of $65 billion in revenue, you have $45.5 billion flow down to gross margin. You're continuing to invest in R&D, continuing in sales marketing, but look at your sales and marketing spend over the last year. It went up just $600 million. In fact, a little less than $600 million. Keep in mind, we added nearly $9 billion. In fact, just a little over $9 billion to our revenue over at Microsoft, and we spent less than $500 million more on marketing and sales. It's just unbelievable. General administrative, where we've seen some other companies kind of cut. We look at Meta later today. They continue to cut this. Ticked up a little bit from 1.5 up to 1.7. Your operating income off of this $65.6 billion in revenue came in at a cool $30.5 billion. So you get a sense on where this company is going to be next quarter when they print this $69 billion worth of revenue. It'll be another $4 billion higher than the previous quarter. More than likely, $1 billion of it too will flow right down here to operating income. Flow all the way down to net income. Came in at right around $24.7 billion. Last year, you had an impressive shade over $22 billion. The cash balance sheet still looks good. The company made a big acquisition over the past year or the past year and a half or so, acquiring or closing on that Activision Blizzard deal, but it's had no dent on the cash balance sheet, as they still have over $78 billion in cash. They still have some long-term debt sitting down here that ballooned just a little bit after that acquisition of Activision Blizzard, that pretty expensive acquisition, but they've got more than enough to cover that. From a cash flow statement, this is, you have to like clean your glasses off to understand that this is a 3-month operating cash flow number off of $24.7 billion worth of net income because of the subscription model based of their business, where they're able to only recognize revenue after the services. So you might pay a year forward on your Microsoft subscription, where their cash flow, their operating cash flow, can actually be higher than what they can print to the net income side and even the operating income side. And you see that here from the 3-month basis. They banked $34 billion worth of operating cash flow. Last year, it was 30.6. Now, they flipped the financing and the investing. Most companies actually have these reversed. So I'll come down here to the additions to property, plant, and equipment. When we looked at Google yesterday, they were on about a $13 billion run rate per quarter in terms of investing into their AI. Well, Microsoft's at about 15. In fact, just a shade under that. And interestingly enough, on the conference call that they noted that they are still running at full capacity. In fact, beyond capacity for their cloud division, meaning that Microsoft has more demand than the capacity that they have available to give to customers. My guess is Microsoft obviously uses some of its own capacity for their own internal customers, and then they lease out any of the extra space. They're basically saying that they could lease out even more. This is particularly bullish for the semiconductor companies, as long as and this is like the 4th or 5th conference call in a row that Microsoft has said this. Anytime that they are below meeting the expectations of their customers, well, Microsoft and the rest of these companies are going to continue to invest in the property, plant, and equipment, the data centers, the GPUs, the CPUs. This is particularly bullish for basically all of the semiconductors, but particularly when it comes to AI. Obviously, NVIDIA. And that's obviously accelerated over last year. We spent about $10 billion on property, plant, and equipment. Now we're up to $15 billion. From the financing side, it's exactly what you would expect over at this company. They continue to buy back shares, but it's not at the pace that you're seeing over at Google. And I tell you what, with Microsoft trading at 32, 33 times forward, I wouldn't be very excited about this company continuing to accelerate this buyback. In fact, it decelerated year over year. I actually like to see the Googles of the world, and they are spending more and more on that. They continue to pay dividends over at Microsoft, and that dividend payment, whenever it's up for an increase, will likely just continue to do that. Stellar financials. It's exactly the type of quarter that you'd expect out of Microsoft. The guidance came up a little bit light, and I think that's why we're looking in the after hours. Shares of Microsoft are down about 4%. Now, in the long-term trend with Microsoft, I think you can imagine what the trend is like, and it is basically straight up in the air. Now, the more micro trend that we've been on is actually making a series of higher highs, higher lows, but it'll be decision day probably over the next week or so with Microsoft. It really does need to hold this 413, 409, call it 410 level on its share price. If it does not do that, it actually moves Microsoft into an area where I'd be pretty excited about buying it. Really anywhere south of 400. In fact, the further it goes down under $400, the more aggressive that you're going to be able to buy these shares. Obviously, that will bring in the forward price to multiple on this one to maybe a more reasonable, maybe back into the high 20s. That'll be something investors will be slightly more excited about. Technically, you would expect the stock to bounce here. So if you want to play a technical bounce, you actually wake up tomorrow and buy this one. You would set a stop loss pretty close underneath the shares, probably at 408. So you're going to be risking like $8 on this one with the idea that we make a new higher high and the other high up here. That's why this trade, I wouldn't call it risky, but you have a lot of upside on this one. And really, to me, with Microsoft, the risk is more to the downside. This chart is setting up to where it's easier for this stock to move to the downside than to the move to the upside. But if it does move to the upside, you're going from about $415 where the stock is in the after hours up over $470 per share. This is the beautiful type of risk reward setups that you're looking for. If you're setting these types of things up, you're risking $8 to the downside for $60 to the upside. It's almost 10 to 1, but not quite. You could set it up like that if you want to set your stop loss even tighter to the current price. With Microsoft, long-term investors, you're looking for this one to break below 400. You're adding to your position. You're starting one. Short-term traders, you can wake up tomorrow or even in the after hours on some of these Robinhood apps. You can buy this in the after hours. Put your stop at like 410, pretty tight underneath the shares because this one will either reverse very quickly or it'll move south of 400 and you're playing the upside probably back to the middle of the channel as to 450, trailing stop this thing all the way back to the 470s. I love Microsoft. Obviously, their guidance leaves a little bit less to desired, and also their valuation compared to Google, if I were to choose between the two companies, maybe even toss Meta in this one. I think Microsoft would bring up the rear, but they've had such much of their performance kind of pulled forward, and a lot of their AI spend has been telegraphed. And tell you what, that OpenAI investment that they made just a year or two ago, that is probably factoring into the valuation as well, as that company will eventually go public. And at that time, Microsoft might be able to ring the register on maybe one of the best investments a large public company has ever made. Hopefully, you guys enjoyed today's video. Be back later with Meta. Good luck with your investments.